Yes, Carrie Firestone, CEO and chairman of Aureus Asset Management and a CNBC contributor, and Andres Garcia Amaya, the CEO and founder of Zoe Financial. Good to see you both. Thank you for joining us today. I'm going to start with a curveball for both of you. You may have heard Dee Bosa reporting that Airbnb is getting ready to file to go public. Carrie, would you buy Airbnb?
Well, I think it depends on the price, right, Phil? So I'd have to take a look. I mean, we're interested.
But do you like
the
company enough that you would want to invest in its future?
Well, I think Airbnb has shown itself to be resilient in that it's found ways to rent to people who are trying to get out of a city. They're stuck in a small apartment, perhaps. The VRBO aspect of renting houses has come into vogue during the coronavirus, and they've done a good job there. And when people start traveling again, of course, they're going to start to pick up demand, and consumers will go back to Airbnb. So, yes, I think it's an interesting idea.
Andres, and bearing in mind that yesterday that judge said they've got to consider their drivers as employees. That's an added cost right there if that goes through. Would you buy the stock?
So I don't comment on individual stocks, but what I would say is that from a macro perspective, what this tells us is that a CEO that essentially was the most negatively affected, maybe outside of Uber because of the pandemic, feels confident enough to do a IPO still this year, right? So that, I think, is what's interesting about this. It shows you that window for IPOs is opening not only for software companies, but for companies that do have that physical world exposure.
Okay. Let me get some other news out of the way right now. The 2-year note auction results are out. Or is it 3-year note auction? Okay, I misheard. But Rick Santelli is going to tell us how it came out. How'd it come out?
Bill, it was a stellar auction. We know that prices have sold off today, pushing yields up. And it looks as though investors domestically and globally probably looked at that as a concession, because this 3-year note auction at $48 billion, the biggest 3-year note auction ever, came in at a yield at this Dutch auction of 0.14. The when issued market was trading 17.5. The bigger that spread, that's highly unusual. And of course, lower yield is higher priced, so it priced aggressively positive. Let's go through it. That's the all-time low yield as well at 0.14, by the way. 2.44 bid to cover. It's roughly the 10 auction average. If you look at indirects, Bill, 57%. This is the best going all the way back to December 2017. Direct bidders were just a smidge light at 12.3, and dealers, they took only 13.7. No matter how you slice it, we're kicking off a record $112 billion in supply with 10s and 30s yet to come, and it certainly seems as though today was viewed as a sale on 3-year notes. Back to you.
Very quickly, our graphics people are dying to know what grade you give it.
Oh, I gave it an A as an apple, a big A here.
There you go. Good start to the week there. Thanks, Rick. See you later. Andres, you're watching yields very carefully relative to their valuation to the stock market. So what are you seeing right now?
So I think that is one of the most interesting graphs if you put up when it comes to the 10-year yield, for instance. You were mentioning earlier, right, that it's 0.65, and that's actually because it saw a bit of an uptick. If you look at it adjusted by inflation, you're getting a negative real yield of 1% or a little bit more. So when you think about why the markets might be at all-time highs on the equity side, is that good old, where else are you going to put your money, right? A high-yield savings account is yielding 1%. A 10-year treasury bond for the U.S. government is giving you negative yields adjusted for inflation. So I think as long as we have this environment in which the other options don't look as appealing, valuation on the equity side is not as important versus its own history. Is more important to look at versus the other options.
Meanwhile, Carrie, I'm trying not to ignore you, but with all this news breaking, you're still hanging your hat on recovery stocks when it comes to the COVID virus here. Who do you like right now? Well,
we have a mix of COVID-friendly stocks. Those have done well, such as PayPal, Twilio, Thermo Fisher, even a name like Facebook and Google. But if you look at the other types of companies that you need a recovery for them to accelerate in their revenues, Booking Holdings, I mean, Booking is the type of company that will do very well once people start traveling. RE/MAX, that's the real estate play, but it has been working. Boston Scientific when more patients come in for their surgeries. A name like Health Equity, which requires employment because it's a health insurance savings plan. Waste Connection is going to be doing better when municipalities have more businesses that are open and they are generating more trash, of course. And those are the type of names that we mix with these COVID positive stocks. I mean, COVID names that have done really well. Amazon is another one that's done great during this whole pandemic because consumers have accelerated towards them during a time where they've been locked down and working remotely. So we have both in our portfolio.
You do. You have a whole lot there going on. Carrie Firestone, Andres Garcia Maya, good to see you both. Thank you.